Okay, so going into this Bank of Canada meeting. Previous meeting, policy, unchanged, 1%. In bold, there's still slack in the labour market. There is caution on future adjustments to rates, but also an agreement that less stimulus is required. Now, in terms of expectations, reasonably limited. Unchanged is the main expectation for rates. However, there is a chance of a rate hike, and this is due to the unemployment change a few days prior being the lowest since 2008. Also, the past 3 days have seen 20% pricing in of a rate hike. This is what's pushed the CAD up, as you can see from the chart previously, and what has held the CAD higher. Also, there is possibility of dropping the word caution or cautious from their language regarding rates. Statement-wise, that's what you're looking for. Any references to labour market slack, any upgrade to caution on rate changes, and any comments on changes to stimulus. So they're your three areas: labour market, rates, and stimulus. Now, in terms of levels, we're looking upside, not got a great deal to the upside, 79.02, then the most recent high and a high for quite some time, 79.23s. To the downside, we do have some structure in terms of that head and shoulders pattern. And the neckline will be your first area to look for, followed by the most recent low, 78.73, and then those three low volume areas that you can see lower down. So that's giving you your idea of where you want to be focusing. Now it's down to trades. First up, of course, if they hike rates. This is going to be a buy the CAD. This is going to be a buy looking to move through the most recent high above 79.23, distinctly hawkish outcome. Next up, they could maintain rates and also maintain an unchanged statement. If they do this, this is likely to cause a very strong sell in the CAD. The reason for this is that they're not willing to maintain rates. They're not willing to change rates based on the most recent jobs data. They're also not acknowledging that with the statement either. So that's where you could get a sell and hold trade. Very, very dovish situation from the Bank of Canada. Third, a slightly muted version of that trade, and this is where interpretation comes in. They can maintain rates and then also say there's less slack in the labour market and a little bit less caution needed. This then gives a sense of a bit of hawkishness from the Bank of Canada. Still slightly dovish in the fact they've maintained rates, but they are acknowledging there's less slack. They are acknowledging the change in unemployment. For this, you're likely to see a breakdown, but then potentially not that continuation, or certainly a bit of a slower continuation if we are going to see it. And finally, the slightly more hawkish side of it, maintain rates and reference that labour market slack has virtually gone and that there needs to be a removal of stimulus. So acknowledging forward that things are going to change rather quickly. What you're likely to see is a bit of a dip because of the maintaining of rates, and then that likely to get brought back up. So this potentially could be your fade trade for trade number 4. Fade or reversal trade you'll be looking for there. So be very aware of how they change the wording, particularly in relation to labour and also stimulus and rates. So good luck with the drill. There'll be questions to follow.